Hi all, you're all very, very welcome to our webinar here this morning on investing in tech, current fundraising trends. I'm absolutely delighted this morning to be joined by Anya Kerr, co-founder of Kinson, and Alan Merriman, CEO of Elkstone. And I'm Robert Dixon, I'm one of the corporate partners here in MHC. So I think the topic is a very interesting one, I think, in the current environment. And the reason it's interesting is obviously against a certain backdrop in the public health situation. There has been, over the past kind of 15 months or so, an incredibly buoyant investment, or what we have seen anyway, incredibly buoyant investment backdrop. And it'll be, useful to hear what our two panelists think of that. One other source has described it recently to me as the best environment in history in which to fundraise. And I think the guys will have some views on that and the nuances around that, but certainly that's one thing that's been said. I think some of the studies that we've seen show a very, very strong market. So the indicators from the first half of 2021 were that there was an increase in venture capital activity in Ireland, with a new record for the second quarter, with investments worth 392 million and a record of 641 million for the full first half year, according to the IVCA. So the growth has been across larger deals, so very large deals, and also earlier stage deals. So it's not just that there was a sort of a small volume of very big deals either. And some of the sectors that came through in that study is very strong were in life sciences, software, and fintech. So that's the kind of that's the statistics as they're seen. One thing before I begin to ask Alan and Anya some questions about all of that, what I'd like to draw everyone's attention to is the Q&A function, the questions and answer function at the bottom of the screen. If anybody who's attending the webinar has any question for our panelists, there will be time at the end to answer them. So please do just submit your questions, type them into the Q&A, and we will deal with them at that stage. So I want to start by talking a little bit about that overall landscape. Alan, if I can turn to you first, do you think the fundraising environment is as favorable as the quote I just mentioned from another source?
Well, look, I think, Robert, in truth, I think yes and no. I think the data tells its own story. Record levels of money are being raised by VC players and by private equity players globally. And that money needs to be deployed. So I think the background is very, very favorable, but it's favorable for the quality opportunities. And I think there's lots of interest and lots of sources there from US players in particular, but it is about the quality of the opportunity. And I think if you take an example like Let's Get Checked, which I know is a client of Mason Hayes Curran, that's a really good example of a high quality company, stellar growth, being able to reach out into the markets, and it's inundated with offers from quality players, and I'd emphasize quality. However, the other side of the coin is that, there are many, many founders who continue to struggle to find funding sources. And I think that's down to a number of different reasons. As ever, funding is tough in all environments. And I think it's about issues such as the size of the opportunity and where venture-like returns are available, and the quality of the team around you, and the narrative that you're sharing, and your access to funders. So I think it is a very nuanced environment. I think for those in the right place and with the right narrative, with the right team, it is a super opportunity right now. But I wouldn't underestimate the challenges for many players also.
That's interesting, Alan. And I mean, talking about the challenges for different players, obviously that's with in some ways having a business that's being challenged just because of the restrictions and the things people have been able to do over the past year and a half plus. So, I mean, in terms of this environment where there's this very fragile public health kind of backdrop, do you think that it doesn't seem to have had a huge in itself impact on the kind of willingness of investors, of private equity, venture capital to actually invest? How does that interplay in your view? I mean, does that not in itself create a nervousness?
No, I think the reality is that this is definitely a market where the polls are clearly leading, and I think again the data very much spells that out. It's also being underpinned by investment performance. So, clearly PE and venture in terms of, asset allocation spaces are having very stellar returns and have been doing so for quite some time. And even though there's a nervousness around what I might call, the valuation levels amongst VCs, that's not stopping them investing. And I personally kind of characterize, and this is the global context, I personally characterize it as a get out of my way market. And what I mean by that is that, the right opportunities are highly sought after, and valuations are not getting in the way. The size of checks that people can write is not a constraint. And VCs clearly are beginning to come down the different stages. So VCs are increasingly reaching into earlier and earlier stages in terms of the funding cycle. And I think we've got to always remember that, whether it's COVID related or otherwise, the one thing that, people have generally done well from is being long disruption, being long opportunity. And I don't see that changing anytime soon. So I also think in this kind of low yield environment, there's clearly a secular push away from the traditional 40-60 asset allocation. And venture and private equity is definitely a beneficiary of that. So I expect the flows to remain strong for the foreseeable future. And I think this is a very, very exciting space.
Okay, no, that's really useful. Thanks, Alan. I want to move slightly now to talk about fundraising options for fast growth companies, and with a focus on the international element of that, because that's what we're seeing. Anya, from your own experiences, what are the main funding options for a fast growth company in Ireland?
Thanks, Robert. Yeah, and maybe just to pick up on some of the trends that you started there with, I don't disagree with the environment that we're in and everything Alan has painted there. We know from Tech Ireland, the first half 2021, very strong for tech startups, scale ups, raising what I think 930 million in that period. So we know it's strong, and particularly if you're of the industries that are cybersecurity, privacy, fintech, big data, digital health, edtech, right? So all of those sectors, if you are of this moment, probably so-called easier, and I still put that in quotes because I don't think fundraising is easy for anyone. But I do think as we drill down through the statistics that Alan has talked about and Robert has talked about, that there's very large rounds being done in this country at the moment. But I do have a worry when you look beyond at least the trends that we have for the first half of this year, that our earlier stage companies, those in that 1 to 3 million, 5 million bracket, that was down on pre-pandemic levels. And that is a concern when we do think about this next generation that are going to deliver employment and exports. And if we're not supporting those early stage, they're past the pre-seed, they're into early stage, they're definitely growing. If we're not supporting them now, how are we going to elevate and ensure they're on the springboard to be late stage companies of the future? So that's just kind of one thing in terms of the context setting here. In terms of your specific question, Robert, about the options available, I do think it probably boils down still to 6 areas for growing companies. So obviously venture capital is something we're going to talk a lot about over the next hour, tried and tested, ideal particularly for startups doing a lot of R&D, where you can get a VC to lead. And we know increasingly, yes, we've got great internal VCs here in Ireland, but increasingly we're seeing those VCs partner with external VCs and greater collaborations there. So we'll come back probably to venture capital a lot. But one thing I see the banks here susceptible to and encouraging the conversation at least is around venture debt, and that idea for some founders where you don't want the equity dilution, you want to keep things within your control, you don't want maybe the onerous reporting or board representation and all of that entails, and kickstarting that conversation with your bank about bootstrapping with bank debt financing. And we do know with banks here in Ireland, they'll have the conversation if you have that stickiness, if you can show your monthly recurring revenues are strong and you can demonstrate there is growth and a long-term sustainability to your business. The third one is obviously angel investments, and we know Ireland, we have a lot of brilliant private angel investors, but increasingly we're seeing them come in as part of syndicates, and HBAN here obviously in Ireland is a particularly good example. And I think what they're managing to do is attract larger numbers of investors. I think in the first half of this year, HBAN managed to put 200 investors into 37 deals in just the first half of 2021 alone. And what you're seeing, I think some of the syndicates here do, like HBAN, is now go across borders. You know, they're building these syndicates in Dubai, in London, in Singapore. So bringing those external angel investors into the country and making sure that that pool of funding is widening. The other one I suspect many listening to us today are familiar with is Horizon Europe, and it is definitely worth startups, no matter what stage you're at, taking a look at that. There's something like 95 billion pledged there until 2027. It's really designed to support all the areas of research innovation. There's the European Innovation Council within all of that. There's about 10 billion there. And I would say with how that is set up, it's particularly designed to help those innovations that might actually feel too risky for your private investors. So for anyone looking at Horizon Europe today, European Innovation Council, you will see that they've tried to design it, that there's 3 different schemes to match the 3 different stages companies are at. So you'll see there's the Pathfinder, which you can imagine where you're at, grants of up to 4 million, research, develop new ideas at the very start. You've got the transition where you're kind of going from, you know, that scale scrappiness to now growth, and you've got the accelerator. So, you know, even how it's labeled, you'll be able to immediately identify, yeah, that fund, that grant is for me. The 5th one, I would say, and know, talking to a lot of founders in recent days, that they are looking at increasingly is crowdfunding, where you might have a VC that's leading, you're trying to get those matching funds, and we all know what a struggle sometimes that can be. And crowdfunding, I know even with Spark crowdfunding here in Dublin, I think they did about 6 million in the opening 8 months of this year. And what they're finding is that you have people who have been sitting on savings, they have deposits built up over the last 19 months since March 2020 and are looking for places to invest that. And I think what you're seeing with some of these crowdfunding initiatives, the average investment is maybe only 2,500, but you multiply by that by hundreds of individual people and you're starting to get up to big deal terms. And then the final one, which I think Robert will come back to later, is Enterprise Ireland, which, you know, to their credit, very much there at every stage of a startup's journey. I think sometimes Enterprise Ireland can be seen as it's your local enterprise office, it's there at the start. But no, I think at every step, your HPSU or you're moving into a new market or you have a new product, there's grants and initiatives there to support it.
Yeah, Anya, thanks. I mean, that's I would imagine an incredibly valuable set of options. It's not necessarily that easy to find them described in that way for you know, for really high potential you know, fast growth companies. I suppose I'm just interested when I hear that range of options. If I personally, Anya, was somebody, you know, at a high potential fast growth company, I was looking to raise capital, and I didn't really know that there's kind of a whole load of excellent options there that you've talked about. How do you boil that down? I mean, who do you speak to? Or I know it's different for every company. Is it just about having a lot of conversations and trying to just work it out? Because clearly they're trying to grow a business at the same time. So any tips around how you really boil that?
Yeah, this is definitely something I've talked to Enterprise Ireland. Like I went to New York for 2 years, came back to do a second startup, had been involved in Storyful, went to Facebook, back to Kinsen. And I've often said this, it would be amazing if you had that playbook that kind of says, here are your range of options from going for the debt financing, here's your Enterprise Ireland, angel investors. And I feel that playbook, this might be something Mason Hayes you could take on, that playbook probably doesn't live there. It's all a little bit siloed. And so unfortunately at the moment, I think what does happen for a lot of founders is you're just doing all of your scenarios. You're looking at your wish list, kind of your plan A, right? If we could get this mix, this blend of maybe an angel, a VC to lead. And then you're looking at, right, our plan B, okay, we could look at this mix. And what ends up happening is, and I'm sure a lot will empathize with this, you end up probably having 30 conversations before you will close a round. And, you know, those are 30 conversations well spent. You hone the pitch, you start to see who is the right fit for you, but that is time consuming. And I do think with fundraising, you have to be all in as a founder, and it's literally probably for a period the only thing that you do. It's ruthless prioritization in saying, right, I'm going to prioritize these calls and outreach, but it does take, it's networks. You know, we still live here in a small country. There's only a small number of VCs, angel investors, and talking to other like-minded entrepreneurs. That's why I think events like today, Robert, are so important for people to come and see, yep, entrepreneurs, we're talking about the same things. Who have you been talking to? And sharing that little bit of intel. I do think there is such power in the knowledge you can get from events like this, because unfortunately it doesn't live in a playbook somewhere.
Yeah, although we'll take our homework on board, Anya, and try and come up with something in MHC that might help with that. So very, very useful there. So Alan, again, going back to the statistics, and I know statistics can be a bit of a lie sometimes, but what they are indicating is that the level of international investment in Irish companies versus the level of investment from Irish investors, I suppose, has actually increased. So of all those kind of record statistics of investments that I mentioned there, 70% were from international investors versus 30% from Irish investors, where for the same period last year, it was actually 55%. Is that a trend you're seeing, that there's actually increased investment internationally into Ireland? Obviously, it's not a new thing, but just as a proportional thing, is that something you're seeing?
Yeah, definitely. And, maybe just to give a very clear indication as to why I see that continuing. I mean, with no exaggeration, within the last probably 6 weeks or so, we in Elstone, we've had Sequoia, we've had Balderton, we've had Redpoint, and we've had DM Capital, all come and visit, engage with us here with a view to having eyes and ears on the ground. I mean, the interest in Europe, especially from the US, has really taken off. And I think as I said, the amount of fundraising that's going on within private equity and VC, I think is driving the need for these players to, be very engaged in terms of finding opportunities outside of the Americas. And so I think we will see more and more international interest here. Elstone alone has dealt with UK firms, French firms, German firms, VC players, all VC players in having co-investments within the Irish market within the last 12 months. And again, we're not alone in that way. So I'd be very optimistic about the future in terms of international players coming here. I think it's important, as Anya said, though, to recognise that the ecosystem here is made up of many different constituents. And the international players are going to be interested in, the faster growing companies and the companies that are probably progressing through A into B and beyond. While that early stage is still going to be very dependent on the local ecosystem. And that's something that I think we still need to do collectively a lot more work on to get the Irish ecosystem to where it needs to be to serve us well for the longer term.
So I think there's a few interesting points coming out of that, Alan, and it picks up on the point Anya was making about the kind of earlier stage almost being slightly more of a concern. But what I'm picking up from what you said there, Alan, is just this idea about the international investors actually looking to team up, that it's you they want to talk to as well. It's not almost an attempt to supplant or replace any Irish investment. It's just teaming up. So in some senses, it's not that that's a threat or a challenge to Irish investors. It's actually a positive from what I'm hearing. But would that be your take on it as well?
Yeah, no, I definitely see it that way. I mean, my perspective is, yes, some local VCs may lose out on a case-by-case basis in terms of competition. But I think in terms of the macro context, it's a win-win for everybody. I think international players coming here are going to be incredibly helpful in terms of bringing their learnings to the Irish market, and in terms of helping founders and companies scale their global network, their expertise, their bigger checks, etc. And I think they're going to need to collaborate and partner with local players. So I just see the ecosystem as a whole, genuinely really benefiting and compounding from that. And I think it's something to be embraced rather than to be scared about. I think it'll force us all to up our game. And I think, again, in truth, I think that's something that this ecosystem needs. We need better quality VCs operating in the Irish market, both local and international. And success brings success. So I'm very confident with the successes Ireland is having of late. And there'll be more to come, and that will build a momentum that will serve us all very, very well. So the more the better, and I mean that very genuinely.
Yeah, it's really, really useful to hear that. And Anya, just, I mean, as part of that, again, to go back to the statistics, I think a big element of that international investment is coming from the US. We're certainly seeing that on our deals that we're working on, huge investment from the US. From your own perspective, what are the differences people should be aware of if dealing with a US investor? US venture capital and different types of firm can have different characteristics, if you like, but US versus Irish investor, what do you think some of the things for people to be aware of are?
Yeah, it's a great question. I will say, yeah, and I think what we're talking about here is borne out by the IVCA data for this year in terms of that flood of international capital coming in. I think it accounts for something like 70% of all the fundraising we've seen by Irish companies in Q2 2021. And I think that is a good thing. Ireland, as we've talked about, small country. And I do think when you've got a small pool of VCs doing great work, but there can be a little bit of risk aversion, I do think, built in terms of they're trying to place smart bets, but they're trying to almost ensure that there's a certain inevitability to, their success metrics, given that it is so small and they're taking on risks. And I do know from talking to founders, that can feel like the biggest hurdle that they have to get over in the Irish sector here is just that feeling sometimes of risk aversion as opposed to sometimes seeing that bigger picture. So I do think everything that Alan has talked about is great in terms of seeing that international buy-in, particularly US investors, where it's a strong endorsement of everything we're doing here, shows the global interest, shows the broader view. We're able to expand that pool, that deal flow. I do worry sometimes that we're probably not great compared to a lot of other European countries at talking about the strength of the ecosystem here and the amount of great innovation that is happening. So I think as an aside, we probably have to do better there. I will say in terms of sometimes the differences between US and Europe, and I've heard this play out with other founders, is sometimes just speed. And I don't know why this is, whether it's just a cultural thing, maybe it's just time zones, I don't know, but definitely American operators, there's definitely the rhythm, the culture is definitely faster moving at the moment compared to, I think, European, whether it's slower just because there's greater due diligence, maybe more bureaucracy, but I do think that's probably something founders have to kind of bake in. Now, you can use that to your advantage that if the US is leading, they can also set the pace, and you're going to have to find ways to pick up the phone to your European investors who are potentially matching to pick up that speed. But that has definitely been a tension point from what I have seen over the last 19 months. And I think if we don't get around that, sometimes tension points around the due diligence and the bureaucracy, you do worry about, right, if we can't match our US investors, are we going to have a brain drain problem in future? Can we honestly say here today that if Stripe had to do it again, that they would build out of Ireland as opposed to be primarily a Silicon Valley company? And I think we've some hard questions to ask ourselves as an ecosystem. The amount of, as we've talked about, that flood of international investment, I do think, to Alan's point, is largely a good thing. But I do think, we all have the scars of boom to bust and hopefully the learnings of that. And how do we build resilience in those so that there isn't an over-reliance, given we know those cycles of boom to bust and how international investment can be cyclical, it's tides that come in and out. So I would say to founders as well, absolutely look to your US investors, European, but also I do think there is just a responsibility on all of us to see, can we also just ensure that there's some foundational funding that you have bedded into your company? And also just on policymakers, like we see and hear Boris Johnson all the time talk about, Britain's entrepreneurial spirit and how do they advance that? And I do think for all the changes we've seen in the budget, there is an awful lot more to be done in this country if we're going to give ourselves that buffering while taking in the money that we would like to see from US, Europe and beyond.
Great. Thank you very much, Anya. That's really useful as well. I want to move on to the fundraising process and a few things around that, Anya. So, we've talked about the conversations and the different options for, a fast growth company that may wish to raise capital. Once you've had those conversations and so forth, I suppose taking it from there to a point where you've actually signed a term sheet, and obviously there's more beyond that, but can you describe that journey a little bit? How you go from, the conversations to actually closing a Series A round of several million, for example? What are some of the steps people should do?
Oh my God, even just thinking about it is just such exhaustion. It causes me weariness. But I do think even before you have the conversation, and it seems like such an obvious thing to say, but it's just to make sure you sit down and screen in and screen out who you think is the right fit. Like really actually looking at the portfolios, whether it's your angel investors, your VCs, the banks, looking at all of this and saying, am I the right fit? Like, have they done something in this area before? Have they been involved? Is this something that matches their own purpose, strategy, the tactics that they're deploying? So I would say like that pre-research, that ruthless prioritization to make sure you're actually having the appropriate conversations in the first place, because there's nothing as demoralizing as getting into a process and realizing actually we were just never right for these guys in the first place. They're more at the later stage, or they need monthly recurring revenues of X. So I would say the more you can do your pre-homework, the better. And from there, like, it is, as much as we always, I think as founders, we tend to always think about the number of rejections we got. You know, we did 30 conversations, 25 rejected us and we took 5. But in that 30, you know, I'm using that kind of as a ballpark. There have often been moments where we've had to say, actually, they're not the right fit for us. Let's not pursue that. And that's where you do kind of just want to get that balance and build a little bit of resilience in at the start. And I would say along the process, it doesn't matter from that first conversation to write ink signatures. There's so much is about trust and chemistry, and not to forget just the importance of that relationship building in all of it, and coming back all the time to your own sense of why, you know, checking in on that at every stage of this. Like, why are we doing what we do? Why us? Why now? And why this investor? Like, why is this investor a good fit for us? Why does this make sense? And do we actually like each other? Because you are trying to line up suitors. You know, I often think of a dance floor analogy, you know, and we've all had our teenage disco moments over the years where there's somebody you like, and with something like a startup, you're on the dance floor, you've got your suitors around the dance floor. And what you're doing is, you know, you like them, the chemistry is there, you think it's a good fit. And what you're looking for your investors to do is who is going to come out on the dance floor first. You know, that awkward moment at an Irish wedding of who's going to take the floor first. Because, you know, when one person goes, others will follow. You know, you're going to have that moment of someone will lead and the others will match. And that's often what you're trying to do in those really early conversations is, can you push it far enough that someone with confidence goes, yeah, stake in the ground, I'm going to take the dance floor first. And I have to say, I think that is the part that wears the patience of founders down, is finding someone to step out and take the lead. And that is, you know, that's a tactical play by everybody. But I think for founders, that can be particularly exhausting because it sometimes can feel a little bit like mind games and just very tactical in all of that. I think though, once you have your suitors out in the dance floor and you know you're putting this coalition together of people who get you and who care and the chemistry is right and you're building that trust, it is all the time. I would just say, even if you have 5 suitors lined up, it's just always knowing what is your plan B. If you lose your lead or someone falls away, just always knowing your plan B, C, D, E. But constantly asking yourself the question right along the fundraising process of what is the worst that could happen here, and constantly check in on that. And if you get really uncomfortable with the outcomes, you maybe need to dial it back a little bit, but always knowing, you know, your so-called bat now, like what is my best alternative here to a negotiated agreement? Just always, that is your control as a founder in all of this, is always knowing that you can control, you can influence. There's going to be certain things that you have to accept. And I will say from all of that then is just to prepare yourself. I would say over the last 19 months, Robert, there's probably more levels of due diligence. Like Mark and I, we've done a startup before. We definitely at the point last year with one of our pieces of due diligence, we were down to having to get employer references. Like it got to that level, even though, you know, we'd have a CV that would show, yeah, these guys would seem to know what they're on about. Definitely the levels of due diligence have gotten more detailed. So I think just for everybody to prepare for that. And I will say it's just slower. We had, you know, we were very lucky last year in that most of our investors before March, we had met in a room. We'd done that initial chemistry check, that initial conversation, but the deal took place over months and months through remote, and it just was slower. I think when you're relying on Zooms and emails, it requires new levels of patience. You've got more teams involved, and probably just to allow for the fact that this may not happen sometimes as fast as if you were sitting in a boardroom together. And in all of that, I'm trying to think what else. Like I think for founders listening in today, it can feel a little bit when you've got those suitors lined up and you have your lead, it's a little bit of air traffic control. You know, you're just trying to get all the moving pieces into play, make sure everybody's at the start line together and you're just keeping them moving along to the end line, that you're not moving anyone. And so it is very intensive. I would not underestimate the amount of exhaustion and adrenaline it takes for months. But what I will say is, for anyone listening today, is that if you do have a co-founder or if you have a really strong CEO, one of you take on that fundraising conversation, and maybe one of you then is the details, the deal signing, the process, just so you can be all in and try and protect probably your broader team. Because I will say, fundraising, as brilliant as it is, it can be a huge distraction on a team, and you do have to allow for the intensity of it, and inevitably that you're going to have curveballs and pivots and have to go back to the start or maybe trigger a plan C, and that's all part of it. It is all just resilience building.
That's a number of really useful insights there, Anya. I mean, I suppose probably just one point I want to pick up on is this idea in the remote environment of it, you know, every deal's taking longer, which I think is a fair, certainly in our experience, is a fair observation, I would say. I think there are other ways that it can make things more efficient, but equally, you know, it's it certainly has its challenges. Is that the main challenge you've seen with actually trying to do a deal from a kind of a party raising funding perspective? You know, that it actually creates, you haven't got people in a room. I mean, overall, will you be welcoming a return to a situation in due course where it's not remote, or do you think a lot of the new efficiencies are there to stay in terms of remote signings and things?
Yeah, look, I think remote has made it so much more efficient and productive in so many different ways. But I do think when it comes to this question of trust and that chemistry check we've been talking about, and sometimes that very initial conversation, people invest in people. Like, you know, you have that sense within minutes. Doesn't matter if it's an interview or meeting an investor of, is this going to be a conversation worth pursuing? And yes, we know investors have a checklist of things that they're going through, but often it's just going to be, do we like these founders? Do they have a vision? Like, do we like what they're trying to do? And I do think that is harder to communicate through a Zoom. It just is. So I know of founders over the last 19 months who, you know, in order to maybe get to sit in that room in San Francisco or New York, they did their quarantine in Mexico for 2 weeks in order to be able to get into the United States to sit in that boardroom, look them in the eye, really feel the energy, get a sense of, am I screening this person in or out? So I do think a lot of founders have found that trust building, that chemistry check, just much harder through Zoom. And then as a consequence of that, it is the speed that we're talking about, Robert. Yeah, just the emails, constant loops of emails, nobody's fault, it is what it is. Versus if somebody put you in a boardroom and said you 3 days until your flight back to Dublin, Ireland, get this deal done, you would. There's nothing like a deadline in those moments where you've flown there and there's a commitment. And I will say as well, for all of the efficiencies and productivity, I know talking to a lot of founders, they have just actually found the back-to-back pitching on Zooms absolutely exhausting. Now, the pro, you get to talk to so much more people in multiple countries that you mightn't have otherwise. You're getting to refine your pitch all the time. And in some circumstances, I do know founders who, because they did just Zooms back to back, they did close some rounds in 6 weeks. So there are definitely cases, as much as I'm saying it's slower, I equally have heard the opposite of that, of just being able to go quickly into pitch mode on Zooms. They've gotten deals done in 6 weeks. So I think it's different for different companies, but I do think we're missing that first step in terms of the trust building at the moment.
Yeah, no, it makes a lot of sense. You know, if there was that choice, you know, or I suppose to some extent there is, it would be great, and we can take what's useful and from the kind of remote efficiencies, but not be sort of constrained by them either. I want to move to sectors, because I think that's in some ways the big story about, you know, why we're seeing these enormous numbers and very, very successful. It's that certain sectors, I think, have been very successful over the last year and 3 quarters, I suppose. Alan, just to draw a circle around that, what sectors are you seeing as particularly hot at the moment in terms of interest from investors?
It's a really difficult one, because the truth is there's tons and tons of opportunity. And just to give that a little bit of context, I mean, you know, Anya mentioned earlier fintech, and I would definitely agree with that. I mean, one of our early successes was we were an early investor in Revolut, and I was over in London last week, got to hear directly from Nikolai in terms of how they're progressing. Their value at the moment, 33 billion, and his kind of strong line was, they can 10x from here. And the amount of legacy profit pools that they can go after is just enormous. So when you have a 33 billion company talking about their potential to 10x from this point forward, that alone speaks volumes. And another company we invested in is a business called Ham ETF, and they're basically a party that enables asset managers set up innovative ETFs. And the reason I call them out, I mean, we invested in them about 3 years ago, and they basically had not one single ETF out in the market. Today, they've 27, and those 27 ETFs are thematic and are in different spaces, all in the innovation type space. So again, that's just reinforces the plethora of opportunities that are out in the market. So whether it's, fintech, whether it's digital health, whether it's AI, I mean, even here in Ireland, we've got some great examples of what have the potential to be leading class world leaders in terms of Altada down based in Cork, or Protech AI based up here in Dublin. And then crypto, DeFi, blockchain, and PropTech, the future of work, and the environment, decarbonisation, the circular economy. I mean, look, honestly, I can go on and on and on. There is so much opportunity, and that's great for investors in terms of, it's an environment to be positive in my view, but it's also great for founders. Again, I'm very conscious that the audience listening in are going to be both founders and investors. And for founders, I think there's a lot of encouragement in terms of the quality of Irish companies that are getting funding rounds away, that are really scaling in a meaningful way, and showing that a lot can be done from Ireland Inc. in that regard. So look, tons of opportunities, whether you're an investor or whether you're a founder. I'd be very, very positive.
And it's certainly some diverse and very interesting kind of sectors you've talked to, or subsectors even that you've talked about there, Alan. I think the other kind of side to it, of course, is that there are distressed businesses out there, and often it's just being in a sector such as tourism, for example, that's just been very, very difficult year and 3 quarters for them. What's your sense of the kind of willingness of investors, shall we say, to take a longer term view of businesses that may have been badly impacted just by being in a sector that things have been very difficult for in the last year and 3 quarters? Is there nervousness there? Is there a willingness to kind of look beyond the pandemic and what's likely to be a slightly topsy-turvy situation for perhaps a bit longer? Or what's your sense of that?
I think it's very challenging. And why do I say that? It's the other side of the coin in terms of what I just spoke about in terms of opportunity. So given that there's such tremendous opportunities, given that there's lots of players offering very strong growth wins out every time. So if you're not showing traction, if you're challenged, and it's very hard to make the compelling investment case given all the other opportunities. And again, I'm very conscious of a founder myself and dealing with lots of portfolio companies. Funding is very, very challenging. You're going to have lots and lots and lots of no's, unfortunately, and typically. Again, of course, there's exceptions. But look, I think the most important thing is that you've got to know your audience. You've got to find the right investors. You've got to be going after the right VCs. And there's always deals to be done, but doing your homework and knowing who you're going after is the most efficient thing you can do, regardless whether you're in a growth sector or whether you're in you're in a bit of a valley at the moment.
Okay, all right, that's really, really useful, I think, to get that other side of the coin, because that's the kind of they're the two sides to the coin, as you put it, that we're kind of dealing with at the minute. One other thing slightly different that I wanted to raise with you, Alan, is EIIS. So the forthcoming changes to the Employment and Investment Incentive Scheme via the Finance Bill are a very welcome development in providing income tax relief to qualifying investors in certain SMEs. Can you give us your views on the importance and likely impact of those changes?
Yeah, look, I again, just to borrow from Anya earlier, I think there's a lot to be excited about, a lot of things to be positive about what's happening in Ireland in terms of access to funding, the quality of the international VCs that are showing interest in Ireland and some of our notable successes that we've had in recent years. Having said that, my honest, candid assessment is that I think the ecosystem needs moving on quite a bit, and particularly in terms of the early stage segment. So I think EWIS, great policy, but it hasn't been working. It's been broken for quite some time. And I think some of the changes that have been, we've lobbied hard for them and thankfully have got them. Department of Finance have come good, and government have come good. I think some of these changes that have been announced in the finance bill have the potential to be real catalysts for change. So in particular, what I think we need in this country, we need a very vibrant angel ecosystem at that very early stage, that 1 million to, in truth, that 1 million to 5 million type range at this point in time. So one of the key changes that the EIS legislation, the finance bill is bringing in is it's allowing an array of investment vehicles invest and get the benefit of EWIS. And I think that's going to be potentially a real catalyst to improve the ecosystem, because I think what it's going to allow is it's going to allow the public at large invest in a portfolio approach to early stage venture. So they'll get a diversified portfolio, they get the protection of what I would call an appropriately regulated fund. And I think that will give more opportunity for businesses like Elstone to invest in the ecosystem. So I think it has a real potential to be a breakthrough. We ourselves are going to launch a fund as soon as possible in Q1. And our mindset very much is we want to have EIS being focused on what I would call true venture risk, high risk, high return opportunities, not asset-backed companies. We want to get this money working in a very impactful way. And I think giving the opportunity for investors to be able to invest through a vehicle to get EIS relief in a diversified manner, but true venture allocation, I think is a very, very, very compelling proposition. So I'm very excited about what that might do. And I'm hoping the Elstone Fund that we launch will be the first of many, not just Elstone funds, but indeed right across the market, because it's badly, badly needed. And I think that success brings success. So if we can deliver the track record we've been having with our club in a fund format, I think that will just really open up opportunities more so going forward. So I'm hoping this finance bill truly can be a catalyst for a significant step up in accommodating a vibrant angel ecosystem in the Irish market, because it really is needed.
Yeah, that's great to hear about, Alan. It's really, really positive that that's coming down the line, and here's hoping it does have the impact that you're talking about there. So that's really positive. Anya, I want to talk to you about some of the supports that are in place for female entrepreneurs in Ireland. There is kind of the Enterprise Ireland Female Entrepreneurship Strategy Scheme. Is enough being done in Ireland for female entrepreneurs, and what else should be done if not?
In a word, no, and that's not to take away from the great work of Enterprise Ireland. In fairness to them, they have put huge emphasis in terms of strategic work, initiatives, grants, etc., to really elevate, promote, support women at all stages. So I give credit there. And we know there are VCs as well in this city, particularly, the Sunday Business article, for anyone who hasn't read it, it's about 2-3 weeks ago, which was all about the female founder ecosystem here in Ireland. And we know there's so few female VCs in Ireland, that there's so few of them, we can name them by their first names, Elaine, Nicola, Debbie, and they do wondrous work. We just need more of them. And we look at the Tech Ireland report again for the first half of this year, 94% of VC funding in Ireland went to male-founded businesses, 94%. So there is an easy answer, unfortunately, to that question, despite, as I say, Enterprise Ireland and others doing the heavy lifting here. And I don't think there's any simple, straightforward solutions to all of this. We look at, again, country size. We know networks mean so much. You need warm introductions a lot of the time in this country. And where do those warm introductions come from? Often male entrepreneurs. Where do you meet them? Well, again, it's events like this, but I'm always saying this, we need more male allies, male entrepreneurs, making sure that you are opening those doors, being a sponsor, being an advocate for more female entrepreneurs and connecting them into the right conversations with the right investors. So, I do feel our male allies have more to be done there. But I do also think there's probably a role for targets at this point, diversity targets in VCs, ideally that are voluntary from themselves. But there's probably something in time, like if we're coming from such a low base, in terms of 94%, that number of male founded businesses, do we need something from an Enterprise Ireland, for example, that is making a mandate over, X percentage of monies? If Enterprise Ireland is coming in, that X percentage of monies needs to be invested in female founded businesses from others in the ecosystem. So I do think we're going to have to think about some targets and quota systems there. And you can sunset then. Like, this is more just to kind of really accelerate some change there. And I do worry as well, when we look at that very low level funding for women founders, is what is the impact of that? Like, great, women are getting investment. It's often from male-led investors, and great. But does that mean that your board is also ending up being very male-led, when again, you would like to have greater diversity in there? So that's where I think we probably haven't tracked enough of how much is the root cause of how we see sometimes our C-suites, our boards, our directorships can be, and we know, very male-led. We've seen it all come from Balance for Better Business, the Women's Council of Ireland. All the statistics are there to show us we have a problem when it comes to our boardrooms. But it starts with that problem, that if our investment is coming from a very, very small set. And in all of that, despite my negativity there, you look at the European Prize for Women Innovators there a few weeks ago, and I think Irish females took up 30% of the Irish SMEs awarded that, in the EU European Innovation Council Accelerator. So, like, we know the ideas are here. We need more women to be encouraged into business. But even to Alan's point there about building, a more mature, sophisticated ecosystem around them, it does need to happen, and it needs to happen quickly. Otherwise, we're going to be dealing with these deficits. And unfortunately, what we've seen is a trend of falling investments, according to Tech Ireland, in those female-led investments from VCs in the past 19 months.
These are important messages, and thank you, Anya. I think it's something we all need to listen carefully to, and certainly something that some very important things to take up there, and hopefully everyone's listening to that. So that's useful, Anya. Just to remind everyone, we do have a Q&A function there at the bottom. There's been some good questions, and in some cases kind of comments as opposed to questions, which we'll run through now in a couple of minutes. Conscious we've about 11 minutes left, so we'll get to that, but please do submit any other questions, and we'll get to them shortly. Anya, one thing I wanted to, and we touched on it earlier on, was one thing I wanted to speak about was Enterprise Ireland, just because it's such an important part of our ecosystem for some of the reasons we've said. And they're often involved with quite a lot of they've invested in quite a lot of the companies that end up doing extremely well in Ireland at an early stage. For any entrepreneurs that might be listening who are seeking to raise funding from EI or in the midst of doing so, do you have any tips on the process or any feedback or advice, even on the decision to take investment from EI, bearing in mind you've been pretty positive there so far, but just anything that might help people?
Yeah, I have to say, a very positive experience. Enterprise Ireland in Kinsen in the last 4 years have invested twice, so they've followed their money. And as I said earlier, I do think no matter where you're at in your journey, you can look at the different stages of what Enterprise Ireland offers and see, what is the right funding stage for you. But I do think it's also worth looking at the various different grants that they have. That new market or new product discovery fund is excellent. You have to, I think it's about 150 grand, you have to make up half it, and Enterprise Ireland matches it. And yeah, there's a lot of reporting in it, but I would say there's a lot of funding, grants opportunities there. And I would say just the key to it is that you will at the start get a liaison officer, and it is just building relationship, because what they can offer you is not only obviously a huge network and connect you with the right people. They've got that database of contacts world over, but there's just such an opportunity, whether it's trade fairs, conferences, joining networks, getting mentorship, coaching opportunities. Like it goes, I would say, far beyond the financial capital. There's more like the human, social capital is really where I think Enterprise Ireland comes into its own in terms of that holistic piece. And I think for anyone looking at Enterprise Ireland, like it is just, know your story, have a story around your projections, the growth, particularly what are you going to do around jobs in Ireland versus jobs abroad? And I think really having a clear articulation of that is really what Enterprise Ireland wants to see. And if you do get funding from Enterprise Ireland, you will have quarterly reporting to do. If you take a grant, you'll have to demonstrate all of your receipts, where the money was spent, what the SMART goals were, what did you achieve, the milestones. That is probably, look, it's standard really. It's probably more than what you would do with your average investor. So you probably do have to just bake in. There's probably more written documentation involved with Enterprise Ireland. The other thing I will say is just Enterprise Ireland, probably like any VC or angel investor or bank, has its processes and procedures, protocols. There's probably just a little bit more of them in Enterprise Ireland. So factor that in, if Enterprise Ireland is coming in to match funds, it's just allowing more time there. And so get ahead of that. Like I would just say, be proactive with Enterprise Ireland. If you think that your suitors are playing out, it's looking like this is going to be the blend, tell them that so that they can be gaming out what they're going to need, because often there might be additional paperwork with Enterprise Ireland. So try and get ahead of it, do your scenario planning, be proactive rather than reactive. And then hopefully you can keep them at the same rhythm and speed that we talked about earlier, where sometimes you're going to have bigger investors moving quicker and some others moving that wee bit slower, only because they have a committee that has to sign off. There's a protocol, in terms of rubber stamping all of this. So I would just say, bake in the time, be proactive with your conversations.
That's really useful advice for Anya, for anybody involved or considering, going forward with Enterprise Ireland, and the comments are very useful. I want to move to, we have a number of comments and questions, actually some are comments, so I'm actually just going to read them out because it's useful feedback, as well, just for on some of the topics we've talked about. One, I won't name who anyone is, but one person's given some feedback. As a founder on our current fundraising journey, I can relate to it. The Irish scene needs to up its game. The lack of time put into opportunities to engage and get a better understanding needs to be addressed. I know all the VCs will say it's the lack of time they have and the volume of deals they see. So I think there's just some messages there around, time people have for the fundraising process and so forth. I think there's another bit of feedback from another contributor. Having sold a business pre-COVID, then raised funds in COVID, I absolutely agree that deal longevity and stress has increased as in-person meetings have been largely absent and replaced with millions of emails. Founder DD has increased significantly. So that's an interesting trend, and possibly not a welcome one, just in terms of time. And at the end of a long process, suddenly, I think Anya made the point that suddenly there's there's personal DD being done. So I think then just looking at other questions, I think one question from one contributor was, the person is interested in the experience of Brexit and how Ireland will be placed in the next 5 years, following Brexit and its impact. Alan, would you have a view on that? I think.
Sorry, give that to me again, Rob.
Yeah, sorry, just a question came in. So about the experience of Brexit and how Ireland will be placed in the next 5 years in terms of fundraising, and whether Brexit has any impact on that.
Again, my kind of shortcut answer would be, I think if anything, it's a net positive. I think we're now the only real English-speaking country in, kind of Europe proper. I think that's a positive. I certainly don't see it as a huge influence either way. I think we're strengthening. I think the Irish economy has a number of advantages, going back to whether it's the whole pharma med tech scene, whether it's the financial services scene, whether it's the gaming scene. And I think the fact that Brexit will push more and more of what I call the financial services front office over to Ireland, again, I think will be a beneficiary for us in the longer term. So look, it's clearly sector specific, but I wouldn't be troubled by it at all.
Yeah. Okay. All right. So I think just in terms of one other thing that we wanted to, and there's another, yeah. So I think there's another question with someone who's a big fan of female-founded businesses and has been actively seeking female co-founder. Do you think, I suppose the question is really, it might be more for, well, obviously Anya has had comments. Alan, what's your view in terms of what, you know, some of the statistics that Anya has set out there? Is there anything more that could be done, you know, in terms of improving those statistics, and what's you know, what might be some of the reasons? I know it's a slightly difficult question, but you know, is there anything else that you feel could be done on the kind of VC or investor sides to kind of try and address some of the points that Anya made?
Look, I think you know, again, I'll be candid. I think it's extremely challenged, and I think it's for quite a number of different reasons. And I'll just use two kind of pretty live examples to illustrate that. I was over with Balderton last week, and they've done exactly as Anya has advocated. They've voluntarily taken on OKRs around backing female-led portfolio companies, etc. And they would have been sharing with me their scorecard for last year, and they disappointed in terms of achieving what they set out. And one of the reasons that they attributed that to was down to the level of flow that they're seeing from female-led businesses. So that definitely is one aspect. A second aspect is, and I'm going to use Elstone here, you know, we recently hired and deepened the team further. We were very keen to get more females as part of the venture team. We didn't get many, you know, what I might call interested applications. You know, the ratio was probably, and I'm not exaggerating, the ratio was probably, you know, something like 20-1, extremely difficult. And again, you're very conscious of ultimately, you know, as a fiduciary of client money, it's down to you have the responsibility of getting the very best talent, etc. So I think this is a very, very hard one to solve. I honestly think it goes back to, you know, how we raise our own kids and the encouragement to, you know, everybody in terms of diversity to be ambitious and to have the confidence that they can be entrepreneurial, etc. I think as a whole, though, that's something that Ireland, not just in the female space, but I think right across the board, it's only beginning to embrace at this point in time. It wasn't cool to be an entrepreneur 10 years ago. And today, maybe it is. It's a very, very hard you know, role to take on. We know that firsthand. But you know, it's enormously impactful and to be encouraged and embraced. But this is a big problem. I think that it's going to take a multitude of different solutions to get the breakthrough.
Okay, thank you for that, Alan. And I think
probably is worth saying, again, just to use the Elstone example. I mean, the one thing I'll definitely say is that, you know, we've been, you know, genuinely blessed with some of the quality companies we've been able to invest in that have been, you know, female-led, and just to, you know, whether it's low cost labs or whether it's Hydromed down in Galway or whether more recently, you know, we've just got lots and lots of really talented female entrepreneurs in this country. And again, I just think that momentum will build. I think women themselves are very good at encouraging and networking, and we just need more and more of that. So look, very difficult problem to solve.
Absolutely. Okay. All right. And thanks for that, Alan. Listen, we are out of time. There's a lot more we could discuss, a lot more, you know, it would be great to go through, but I think that's been a really valuable discussion. A particular thanks to Anya and Alan for their very, very useful insights, and you know, certainly I think I've learned a lot from hearing them, and I'm sure everyone else that's listening has as well. And thanks again, I suppose, also for those who contributed questions. And sorry, there was some we didn't have time to get to. But one thing, if I could encourage you as you leave, there's when the web automatically on the screen when the webinar closes, you should see a survey. So if you could fill that out, that would be really useful for us. Again, my thanks to Anya and Alan, and hope